Did you know that while most people lose money during a crisis, a small elite is multiplying theirs? Today, I'll show you how the wealthy turn fear into opportunity. In this video, you'll discover 3 strategies they use to protect and grow their money when everyone else is losing theirs. Stay until the end to learn how to turn crises into financial advantages with steps you can apply right now. Have you ever wondered why, when the economy is shaky and most are panicking, some come out richer than ever? This isn't some dark secret or magic formula. It's a strategy the wealthy have used for generations. And now, you can use it too. Crises aren't obstacles, but playing fields for those ready to seize them. Did you know that during the Great Recession of 2008, while many lost their homes, a few were buying assets at bargain prices? This doesn't happen by chance. Recessions, market drops, and moments of collective panic create something the wealthy understand well: low prices, undervalued assets, and less competition. At these times, those who are prepared can buy opportunities at prices that wouldn't normally exist. For example, in 2008, Warren Buffett invested billions in companies in trouble while others were selling in panic. By doing so, he acquired quality assets at discount prices. Today, those investments are worth much more. What sets average investors apart from the wealthy isn't the amount of money, but their ability to see crises as ideal moments to invest in unique opportunities. They see a market drop and don't feel fear. They feel excitement, because they know they're looking at a chance to grow while others retreat. So, the next time you hear recession news or see the market in freefall, don't be alarmed. Remember, this is when the wealthy are getting ready to multiply their gains. And you can too. Want to know how you can prepare to seize the next economic crisis? Let's start with the first strategy you need to master: intelligent diversification, a key tool to minimize risks and capture opportunities. Why? Because in a volatile market, putting all your eggs in one basket is a risk they're not willing to take. Diversifying means spreading your investments across different types of assets and sectors. Not only does this minimize losses if one of those assets is affected, but it also opens the door to multiple gain opportunities. When a crisis hits, different sectors are affected in different ways. For example, in a recession, tech stocks may fall, but gold and real estate tend to remain stable or even increase in value. So where do the wealthy diversify? In assets that behave differently from each other. This includes real estate. Properties tend to be more stable long-term. During a crisis, prices often drop, making them an excellent buying opportunity. Precious metals, like gold. Gold has been a safe haven for centuries. When the market is in chaos, gold usually increases in value, acting as a protective shield for investment. Defensive stocks. Companies in sectors like food, health, or energy, which tend to have constant demand even in difficult times. International investments. The wealthy don't just invest locally. They invest in foreign markets or currencies, which may not be affected by the same crisis. A good way to start is by assigning percentages to each investment category. For example, 40% in low-risk stocks, 20% in real estate, 10% in gold or precious metals, and 30% in cash or bonds. This ensures that when one part of your portfolio suffers, another part could be growing or at least staying stable. The key here is to prepare before the crisis. It's not about diversifying only when the market starts to fall, but about having a structure that can withstand market shocks at any time. Diversification not only protects your finances, but also your peace of mind. Knowing that your savings aren't tied to a single asset and that you're protected even in the worst crises gives you control and confidence to be ready for anything. Now that you understand the importance of diversifying, it's time to move on to an even more powerful and perhaps the most impactful strategy of all: buying when there's fear in the market. The wealthy do it, and here's why you should too. During crises, most people panic and sell, either out of fear of losing everything or lack of preparation. This causes prices of many assets to drop sharply. But the wealthy know this is the perfect time to buy at discount prices. As the old saying goes, buy when there's blood in the streets, even if the blood is your own. Historically, after each big drop, the market tends to recover. For example, in 2008, many assets dropped by 50% or more. But a few years later, those same assets not only recovered their value but also multiplied it. During the 2020 pandemic, tech stocks fell drastically. However, those who bought then are now seeing significant gains. First, it's essential to stay calm and not let emotions take over. The wealthy succeed with this strategy because they don't act impulsively. You don't need to make big purchases. You can set up an investment plan where you buy a little each time the market drops a certain percentage, say 5% or 10%. This allows you to accumulate assets without needing to time the absolute lowest point. This strategy gives you an edge because you're not following the crowd. You're making strategic decisions, and by doing so, you're in control. Remember, while others are selling out of fear, you're buying by strategy, which puts you in a position of strength. Now that you know how to benefit when the market is in panic, let's move on to the third and final strategy, preparing ahead of time. Because the best way to seize opportunities during a crisis is to have the resources ready to act while most are just trying to adapt. Most people wait for the crisis to hit before reacting. But the wealthy prepare when things are good. They create a war fund or reserve of money ready to invest, waiting for the right moment. The key here is simple. Those who have money ready to act during a crisis can take advantage of the best opportunities while everyone else worries about saving what they have. Start by setting aside a small percentage of your monthly income. This fund isn't for regular expenses but exclusively to seize opportunities in times of crisis. For example, set aside 10% or 15% of your income for this fund. Besides saving, you can choose to keep this money in a low-risk, liquid asset, which you can withdraw and use easily when the time comes. Patience is a virtue. Preparation takes time but also discipline. If you build this war fund over time, I assure you, you'll be in a much stronger position for the next investment opportunity. Knowing that you have the resources to act at any time gives you a sense of control and peace. No matter what happens in the market, you'll be ready to seize opportunities without panicking. Now you have the 3 strategies the wealthy use to get ahead in times of crisis. From intelligent diversification to buying when there's fear and preparing in advance, you're ready to view crises from a new perspective. Now you have in your hands the strategies the wealthy use to turn crises into opportunities. If you want to keep learning how to protect and grow your money, give this video a thumbs up if you found it helpful, subscribe to the channel, and hit the notification bell so you won't miss any of our upcoming videos. Share your thoughts in the comments on how you prepare to face crises. See you in the next video, and remember, opportunities are always there for those who are ready.